Hi, I'm Brock.
I'm Jim.
Before we get started, if you want to stay ahead of the cattle markets, sign up for our free daily briefing at herdadvisor.com. It's delivered right to your inbox every morning, 5-minute read. And if you've ever wished you could keep complete cattle records without the clipboard, the Cattle Record Guide lets you enter records from the field with your gloves on. Just say, "Hey Siri, try it free for 14 days at herdadvisor.com. Well, welcome back to Cattle Market Guys, everybody. It's Friday, July 24th, and we've got a lot to cover this week because, frankly, it's been a wild one. Let's start with the snapshot. Looking at the feeder cattle numbers, 500 to 549 weight steers came in at $443.35 per hundredweight last week. And that's actually down from $450.41 the week before, and down further from $463.08 back in late June. So we're seeing a pretty consistent slide in that weight class over the last month.
That's a pretty steep hill to slide down, Brock.
It is. Now the 600 to 649 weight class is telling a slightly different story. Those steers actually ticked up to $405.21 per hundredweight, up from $413.47 the week prior. Wait, let me correct that. They're actually down week over week if you look at the trend, but volume was heavy. Over 5,000 head moved through on that $405 print. The futures side is where it gets interesting. Front month futures have fallen from $367.94 back in late June down to $352.27 as of last week. That's a serious move in just a few weeks.
When the board moves that fast, somebody's getting an ulcer.
The article from the cattle site backs that up too. Feeder cattle futures sagged again on CME just this week, with cash cattle trade remaining weak and that hot, humid weather across the Midwest weighing on things. Now looking at the predictions, the national one-week prediction for 600 to 649 weight steers is $395.12 per hundredweight, and that actually drops further to $389.89 at 2 weeks before bouncing back up to $403.43 at 3 weeks. So the models are seeing some near-term softness before a possible recovery.
Well, Brock, I'll tell you what that reminds me of, but let's save it because I think you're fixing to get into that big losing streak next.
I am, Jim, because that's really the story of the week. Let's move into it.
One thing I'll say for now, though, when the market's been beat up like this, watch your basis, not just the board. That's about as useful as a screen door on a submarine, ignoring basis in a market like this.
That's actually great advice, and it leads right into our first deep dive. So according to the data, live cattle futures just went through 15 consecutive sessions of losses in July. 15 straight sessions. That's an extraordinary losing streak. And according to Yahoo Finance, August live cattle futures fell $2.65 in a single session to $224.42.5, which marked a 4-month low. For the week, live cattle futures were down $10.77.5. Meanwhile, August feeder cattle futures lost 65 cents to close at $345.95, which is a 5-week low close.
15 sessions. That's not a slump. That's a free fall with a parachute that don't open till session 16.
That's exactly what happened, actually, because the cattle site reported that futures finally rebounded after that 15th straight losing session. The slump was driven primarily by cash cattle market weakness, combined with the seasonal beef demand slowdown we typically see in the heat of summer. And speaking of heat, the hot, humid weather across the Midwest has been a real drag on feedlot performance. Cattle don't gain as well, they eat less, and that ripples through the whole system. There's also a mention in the July WASDE report that USDA actually raised their Q3 2026 cattle price projections based on strong June numbers, but they're holding prices steady for the remainder of the year. So there's a bit of a disconnect between where the board has been trading and what the government forecasters are saying the fundamentals support.
You know, Brock, that whole disconnect thing, that takes me back to 1993. I remember that fall the board just kept bleeding day after day after day, and it felt like there wasn't a bottom in sight anywhere. I had cattle hedged, and I'd call my broker every single morning half expecting him to tell me things had turned around, and it just never did for what felt like a solid month. Fellas down at the coffee shop were saying the whole system was broke, that cash and futures had come plumb unglued from each other. I about wore a hole in my kitchen floor pacing around, waiting on that phone to ring with good news.
So what happened, Jim? Did it ever turn around?
It sure did. The market finally found its legs once the packers ran short on supply heading into that fall run, and cash values snapped back a lot quicker than anybody expected, caught a lot of the shorts flat-footed. The lesson I took from that, and I still believe it today, is a losing streak in the futures don't always mean the cash fundamentals broke down too. Sometimes the board just needs to work through the paper before it catches back up to reality.
That's a really important distinction because right now we're seeing something similar. The futures have been getting hammered, but the WASDE report is still projecting firm cattle prices for the back half of the year. So producers shouldn't necessarily panic and assume the fundamentals have collapsed just because the board's been ugly. It might just be, like you said, working through some paper losses before it reconnects with cash.
Exactly. Don't let the board scare you into a decision you'll regret come September.
Well, let's shift over to our second deep dive because international trade flows are shaping up to be a really significant story this year. According to the Beef Magazine Export Update, total beef exports are down 17.2% year over year for the January through May period of 2026. And when you zoom out, beef exports have actually declined by about a third since that record year back in 2022. That's a massive shift in just a few years.
A third, that's not a dip. That's a whole different market.
It really is, and on the flip side, imports are moving the opposite direction. Cattle Range reported that total beef imports are up 9.9% year over year for those same first 5 months of 2026. So we've got declining exports and rising imports simultaneously, which tells you something about domestic beef prices being high enough that foreign product is becoming more competitive here at home. Now here's where it gets more complicated. Argentina is absolutely capitalizing on this moment. The cattle site reported that U.S. shipments from Argentina are up 158%, and Argentine ranchers are actually shifting toward heavier cattle because they're betting on this export boom continuing under President Milei's new trade deals.
158%. Those Argentine boys must be doing something right down there.
They are, but Brazil's situation is a lot more mixed. On one hand, the U.S. just slapped a 25% tariff on Brazilian goods, including farm machinery, wood products, and ethanol. But here's the key detail. Beef and coffee were specifically exempted from those tariffs, and that exemption took effect on July 22nd. So Brazilian beef can still flow into our market without that tariff burden. However, Brazil's own export volumes are actually declining right now, down about 10% in July, and that's tied to China exhausting its import quota for Brazilian beef. That's actually the first year-over-year monthly decline in Brazilian fresh beef exports since January of 2025.
You know, Brock, all this trade talk reminds me of 1999. I recall the sale barn conversation turning to all that Australian beef coming into the country, right when the Asian market still hadn't fully recovered from that financial crisis a couple years earlier. So our exports were soft while imports kept climbing, and everybody wanted to blame the imports for weak cash prices. But the real story was a lot more complicated than that. It was a two-way street with exports down just as much as imports were up. I remember thinking, we can't just worry about what's coming into the country. We've got to worry about what's going out too.
And what ended up happening with that situation, Jim?
Well, domestic cattle prices stayed choppy through the rest of '99 and into 2000, but demand did eventually strengthen back up once those Asian economies recovered and beef exports rebuilt over the following few years. Trade flows cut both directions, Brock, and it takes some patience to figure out whether a rough patch is a real trend or just a cycle working itself out.
That's really valuable context because right now we're seeing that same two-way dynamic. It's not just about imports rising, it's also about why our exports are falling. And part of that, according to the Beef Magazine article, is simply decreasing beef production combined with rising domestic beef prices, which naturally moderates how much we're able to ship overseas competitively.
Makes sense. When beef's expensive here, folks overseas start looking elsewhere.
Exactly right. Now let's move into our third topic, because this ties directly back into supply and cost pressures, grain markets, and weather conditions. According to Cattle Range's corn crop condition report, 67% of the corn crop is currently rated good to excellent as of July 19th, and that's actually down slightly from 68% the previous week, and well below the 74% rating from the same time last year. So we're seeing a meaningful year-over-year decline in crop quality.
74 down to 67, that's not nothing.
It's not, and pasture and range conditions are even more concerning. As of July 19th, only 29% of pasture and range is rated good to excellent, down from 30% the prior week, and that compares to 43% this time last year. That's a substantial drop in grazing quality, which directly affects stock or cattle economics and how long producers can keep cattle out on grass before they need to be moved into feedlots. Now, there is some good news on the drought front. The weekly drought monitor shows drought coverage in the lower 48 decreased 1.5% just in the last week, and it's down 12.4% over the last month. So conditions are actually improving on the drought side, even as pasture ratings slip, which tells you there's some lag in vegetation recovery even after rain returns.
Grass don't grow back overnight, Brock. It takes its own sweet time.
That's a fair point. And there's a global angle here too. According to the cattle site, Russian strikes have cut Ukraine's grain export capacity by about a third, with missile and drone attacks causing serious logistics chaos at Black Sea port terminals. That's disrupting global grain flows and could add upward pressure to grain prices if that conflict continues to escalate, which would obviously flow through to feed costs here at home.
You know, Brock, weather and feed costs colliding at the same time, that takes me right back to 1988. That drought was one of the worst I ever lived through on the plains. We didn't get hardly a drop of rain from May clear through August that year, and I watched pasture that should have carried a cow to the acre turn into nothing but dirt and mesquite. The corn crop up north was hurting bad too, so feed costs went through the roof right when our grass gave out completely. I ended up selling off pairs I never wanted to sell just to keep from feeding hay I couldn't afford come July. Neighbors were doing the exact same thing, and the sale barn was standing room only for weeks on end.
How did that play out for the market longer term, Jim?
That drought forced a big herd liquidation across the whole plains in '88 and into '89, which tightened up cattle supplies for a couple years afterward, and it actually helped support prices once the rains finally came back around. Dry years force hard decisions early, Brock, but the herds that get culled in a drought often set up better prices down the road once that supply tightens back up.
That's a really important long-term lesson, especially with pasture conditions where they are right now. If this trend continues, we could see similar culling decisions play out again this fall, which would have real implications for calf supplies heading into next year.
Well, that about wraps up the sunshine and rainbows for this week, don't it?
It's been a data-heavy one, that's for sure. So to wrap things up, futures got hammered with that 15-session losing streak, but showed signs of stabilizing. Trade flows are shifting with exports down and imports up, and grain and pasture conditions are tightening even as drought coverage improves. Lots to watch heading into next week.
Keep your powder dry and your hedges tighter than a fence in a windstorm, folks.
Words to live by. That's it for this week's Cattle Market, guys. We'll see you all next Friday. That's all for today. Remember to sign up for our free daily briefing at herdadvisor.com. And if you want complete cattle records without the hassle, try the Cattle Record Guide free for 14 days. Enter records from the field with your gloves on. Just say, "Hey Siri."
Catch you in a couple days.
All right, see you then.